Markets rally on the back of strong earnings. Is the correction over? That's up today on 3 Minutes on Markets and Money. The market's been rallying nicely over the last couple of days. Of course, we talked about this in this past weekend's newsletter, that this bottoming process that we saw really back to these October lows was holding up good support, very oversold. Sentiment had gotten very bearish. That led to this kind of counter trend bounce in the markets. Good news, of course, is our money flow buy signal is in. That is actually helping support this short-term rally in the markets. But earnings have also been very good, particularly with the big major tech names, which have been supportive of the overall rally in the markets over the last year or so. Markets are not overbought just yet, but they are getting there. So again, a push up here into the 20-day moving average and then the 50 right above that. That's going to be a good bit of resistance for the markets in the short term. Again, a lot of impetus here over the last few days to lift the markets from this oversold condition. But again, about to run into resistance here. So again, just kind of be paying attention that the markets have not completely healed themselves yet, but earnings have been very good. In fact, let's go through a couple of positions that we have in our portfolio right now. Last night, Google announced earnings, really beating estimates across all aspects of their report and announcing a 20-for-1 stock split. That's lifting the stock this morning up about 10%, which is going to put the stock above the 50-day moving average, coming off this deep oversold condition. Now, the stock never really sold off as much as the rest of the market did. It held up very well here during this process, like we saw with the market itself, holding those October lows here. Again, on a money flow buy signal, but getting overbought today. That's going to limit some of the upside here short term. But look for a bit of a pullback above support to look for an entry point if you want to add it to your portfolio. We currently have about a 5% weight in our equity model at simplevisor.com. Looking over at the other report this morning was AMD. AMD also announced better than expected earnings. That stock also going to be up about 10% this morning. We'll be challenging the 50-day moving average here on a buy signal here, not overbought to a great degree just yet. Now, its sister company, NVDIA, that we also own in the portfolio, that should also perform well because of what's going on with Bitcoin mining, the metaverse in general, which they make the graphics and the chips for, video gaming as well, as we've been seeing a lot of acquisitions of video game companies here recently with Microsoft and others buying video game companies. That continues to be a growing, burgeoning business, so more demand for higher end chips, graphics cards, etc. That should bode well for both AMD as well as NVIDIA. We own about a 2% position of both of those in our portfolios right now. Flipping over to healthcare, Abbvie reported this morning as well, a little bit better than expectations. Long-term outlook for this company remains strong. Abbvie, of course, the maker of Botox, certainly hasn't been sagging as of late. Market's been holding up very well here, announcing earnings. They will break out to a new high today. Coming back on a buy signal, has held up well during this entire transaction. We have about a 4% weight of that in our portfolio as well. So again, that's been helped supporting the markets and the portfolio in general by having some of these positions that have held up well despite concerns over inflation, market corrections, etc. And this is one of the important aspects about investing in a stock portfolio. Not all stocks respond directly to the index. And this is one mistake that people make, is that assuming all stocks rise and fall with the index. It is true that the vast majority do, but there's always these cases, and particularly looking for companies, if you're worried about inflation, look for companies that can benefit in an inflation-driven environment. Look for companies that can benefit in a recessionary environment that's deflationary. The one thing about Abbvie as an example with Botox, people that can afford discretionary spending on healthcare like Botox treatments, that's going to be a continued spend regardless of what the economy is doing. That wraps up 3 Minutes on Markets and Money today. We'll be back here tomorrow. Keep you up to date on earnings, markets, and more. We'll see you then.